Let's talk about the markets right now heading into Monday. If you've seen PPI, if you've seen the rate cut expectations for September, they are high. It's probably going to be a rate cut, but it was an unexpected hot PPI number, which caused stocks to go down, which caused dollar went up, which we expected, but we didn't expect small caps to basically still hang out where they're at. Rate cuts are supposed to be good for small caps because these small startups need to get loans because they don't have a ton of cash on hand like Apple does. But with all this said, the actual large cap stocks, SPY, Mag 7, led SPY is still holding up near all-time highs. So when news comes in that's negative, like this PPI, and the SPY holds up, it basically tells us that we're in a bull market. Yes, we did retrace a couple days, and yes, we did look like we were way overextended since April when the Trump tariff rebound began. But now it's looking like we're still in a bull market. So do you hold on to your money and stay fully invested in an index? Do you move to ETFs that are more specialized? Well, if you're considering ETFs, if you've thought about buying an ETF in the past, if you are a stock investor and you don't see an opportunity that fits your risk profile and your investment goals, aka you don't want to just day trade a different stock every day based on some headline that comes out and the truth of that headline being uncertain. You want large, safe, liquid names that move as an entire sector moves. Well, these three tickers are for you. If you haven't seen the tickers below, here they are already. First one is TNA. That's the small cap bull ETF, 3x leverage. XBI is the biotech ETF, and LEU is a 3x biotech ETF. So look, I will look at the price structure of these. I do ask if you like these videos to hit that subscribe button. It is right below this video and it helps show the YouTube algorithm that this information is useful. I want to make sure we do look at the SPY as a whole to start, just to see where we're at, which is way above all-time highs, and the initial tariff unwind, which had this double bottom and raced up to the top. We weren't sure if we were going to get to all-time highs again when we were in the end of June. And since then, not only SPY, but a lot of major names went on a tear. One of the rockiest ones was Palantir. And even this stock has been up an incredible 30% more since that uncertainty of all-time highs. You can see this green overlay in the background. Palantir reclaimed. And this was in the shadow of Nvidia, which has been an absolute monster, doing an Apple type move of 100% in just a few months. Apple looking like this move is what I'm talking about back here. This is what we're talking about, 50%. And this is the reason why you might not want to be invested in stocks like Nvidia, because they could go sideways and digest and base out for 6 months. And there's certainly space on the chart for a stock like Nvidia to do so. So while everyone's talking about Nvidia, everyone's talking about the big names, there are some concerns about whether those are the best place to be when the stock market just went up 30% in the SPY since April. Of course, like I said at the beginning of this video, it's a bullish reclaim here after this little pull down. And the dollar does look good. This is not exactly the instrument I trade. I don't trade oil. This went down, metals went down, gold went down a little bit, silver went down as well. SIL is the futures, AG is the ticker. Gold name that's super on watch is WPM. The futures are slightly down as well. The point of all of this macro gobbledygook is that, yes, people thought the Russell was just beginning to go on an absolute tear, and it did pull back a little bit with this PPI, but the fact is it still held this left side peak, so there's a lot of room to the upside. So what was unexpected was that minor pullback. What was unexpected was how strong SPY's been. What is expected still to this point is high rate cut expectation, 95% going into September, mid next month. And what that means is that, and the purpose of this video is stocks like TNA, if you want to call a ETF a stock, it is super safe. It basically mirrors the Russell. And if you're looking for a slow mover, it moves 5% a day, but it's so liquid that it's safer than a lot of these other stocks that move 5% a day. If I open up an open door, it moves 15% a day, right? If I open up a Netflix, well, now it moves 2% a day. So this is sort of a midpoint stock in between a large cap safe name and a high flying open door volatile risky asset is TNA. It's an ETF of the small caps. And I think the point to buy it is off this 37 level. We can look more closely at a 30-day right here and see how it's holding that level. Okay. If you're looking for a specific sector to buy, well, biotech's interesting. It's been strong. It went above the 200-day moving average of this green line, and it's above this pivot point here. XBI and LEU are the two names to buy. They both look very similar. I believe that you want stocks that are higher above the 200-day in general, which is why XBI looks like it has a little more of a profile where it's clear it's gone above that 200-day. However, if you want a 2% stock per day movement, well, go ahead. But if you want to have a little more opportunity in percent change, LEU is the name of the game for you. So it's a little bit blasé, to think about investing in ETFs when you have these crazy moves in stocks like Open Door, but at the same time, there's something to be said for getting acclimated to buying a name that is very low risk. You don't want to buy a HIMS and have a gap down of, say, 30% in about 3 hours, which is what happened when the Novo Nordisk HIMS partnership dissolved overnight. That's why we buy biotech ETFs instead of individual names. We still get exposure to the sector, which has been on an awesome run since April, like everything else. But in particular, it looks good right now because it has this coiling action and then a breakout in the last few days. So those are the two names for biotech. I wouldn't say that you necessarily need to follow Trump's comments day to day, but you know what? His words do definitely move the market, and you can trade off of them. So even if there's news like this, Trump administration begins slashing jobs at public health agencies, and the FDA as we know it is finished, former FDA commissioner says. What we do as investors who are medium term is we look at the actual chart. And so if we can get in this at a good risk reward point, those comments may be what they may, but the point is, in the last 3 days, this stock has absolutely pumped. So funds are accumulating, and even if there's comments like that and people are spooked out when the FDA commissioner said that year, well, point is the broader market gobbled up that dip, that capitulation, XBI was as good a place to be as a lot of other stocks. And in recent days, we can get in at a low risk reward, high reward, low risk point where you have a spot 91 you can get in, you can risk 89.90, and you risk $1 a share on an ETF that could go up 10 to 20 to 30, depending on how biotech looks as a sector in the future. So those are the plays that are places to put your money. Even as Trump flips this way, that way, Japan this, peace deal this, week by week, day by day, TNA is a small cap ETF that's going to get benefited by rate cuts. LEU is, I would say, probably the more interesting if you're more speculative. Now, it's crazy to talk about being speculative at all when we're talking about biotech ETFs. I think most people would say these are pretty low risk, but it is the 3X bull ETF, so that's why we have this higher percent daily range, and it's just getting above the 200-day moving average. So there's more reward opportunity, you could say, whereas an XBI is established itself above the 200, so this is a lower risk play. It's also a lower percent change. It's a SPDR, actually, Spider Biotech ETF. And the Spider, of course, is just the SPY. It's SPX. It looks like this. And the SPY is about 1/10 exactly of that price. Okay, so stocks are up. Rate cuts are on the horizon. And those are three names that I would take a look at. If you want to talk about your portfolio, if the stocks you're in, you're uncertain about, if you have questions of, are you all cash right now? Do you want to look at new positions, ETFs, or individual names? Go to selfadvisors.com, get on a 15-minute call. It's completely free. I'll pitch you something at the end. It's not to manage your money. I think you'll find that the offer I make is pretty reasonable and personalized to you. I also have a partnership with a verified day trader for people who are looking for a more aggressive, faster route that comes with more risk. He is verified, $9 million trader. I shake my head at this because so many day traders are more likely to not hang around, but his track record is such that this guy is the real deal. And I'm actually going to log into his broker right now. So if you're more of the, Formula One driver than the slow and steady 65 mile per hour ETF, on the highway person, take a look at what Adam has to offer. I think it's the best, one of the best offerings, and the best one I can offer to you on the market in terms of day trading strategies. So let's take a look, and I'll turn it over to Adam. You guys are awesome. Thanks for checking out this free training. I'm here with the lead sensei of the Aikido trading method, Adam Geffert. I'm just going to log into his broker very quickly so you can see that his results are real. This is his Guardian broker. He does have more brokers than this, but you can see that he's made about $4 million net.
Yeah, Guardian's been a good broker for me. And in this quick video, I'm gonna show the viewer how to trade. Show them a little taste of the Aikido trading method, that I've. So let's start with the times to trade. The best times I think to trade are on the pre-market and after hours. The stocks move differently than market hours because there's less traders at that time, and also you can do it in those hours, and it won't disrupt a day job or it won't disrupt things that you might want to do during the day. And let's take a look at some of the trades I actually did today here. I'll share my screen. So these are some of my brokers here. They're all brokers that where you can short microcap stocks below 50 million market cap, nano cap and microcap. And here's the trade I did today. This is KTTA. So I made about close to $30,000 on this broker with this one. And I started out in the pre-market after the news hit at around 7 a.m. I shorted it, then I covered.
And if someone's interested in learning more, how can they reach out?
They can go to AikidoTradingMethod.com and click on the free training, and there's some links on there where you can go and you enter your name and email address, and that actually goes to this video right here. What we'll do is we'll email you and tell you the next steps to learn more about the Aikido trading method.